Hi everyone. Welcome to the LifeStage Retirement Income webinar. My name is Bob Christoffel. I serve as the Manager of Benefits Education here at Wespath Benefits and Investments. We are coming to you live today from our Spellmeyer studio in Glenview, Illinois. I want to thank you for joining us. This webinar will be recorded, and a recording link with some additional information will be provided to you shortly thereafter. With me today is the Benefit Education team. They'll be working behind the scenes answering any questions that come up during this webinar. So I want to encourage you to ask questions. If we can't get to your question during this webinar, we'll certainly follow up with you to answer your question via email. So please use the question and answer functionality in the GoToWebinar toolbox. You are likely here for a couple of reasons. Perhaps you have retired already and you have defined contribution account balances remaining at Wespath. Now, if you're a clergy person, these account balances would include the voluntary plan. That's the United Methodist Personal Investment Plan, the plan that maybe you've made contributions to for many years. But it would also include the Clergy Retirement Security Program with only the defined contribution component. In addition, you might have a balance remaining in the portion of the ministerial pension plan which is not annuitized. You also might be eligible to retire in the near future based upon your age and years of service in ministry. If that describes you, you're in the right place for maximizing your retirement income. We're going to talk about the current program, LifeStage Retirement Income, and how it's been helping our participants since 2015 turn their defined contribution account balances into a monthly direct deposit with the intent to last their lifetime. But I am really excited about some new changes coming in the spring of 22, just a few short months away, to the LifeStage Retirement Income Program. There's going to be some optional components. It's going to be a better LifeStage Retirement Income for you. We'll provide you with an introductory video in the recorded product, which we'll send a link to you shortly thereafter. I want to talk about some key considerations, and these are important when you make your decisions, not just on your defined contribution account balances, but also on your defined benefit plans. So we'll talk about some things to think about as you make some important decision. I'd like to go through the next steps as we head toward this rollout of LifeStage Retirement Income in the spring of 22. There'll be plenty of information and resources available to support you in these important decisions. And then we'll wrap it up with a couple of action items. What are some things that you can be doing right now as you prepare for your retirement, or if you're already retired, as you make decisions about your defined contribution account balances? I'm going to ask the Benefit Education team to submit some of your questions to me at the end of the session, and we'll go through some of those questions so the whole group can listen and share in that knowledge. So what exactly is LifeStage Retirement Income? Well, it's one of the two LifeStage services. You may be more familiar with LifeStage Investment Management, which has taken the burden of self-managing your defined contribution accounts off of a lot of our participants' shoulders. This is the companion LifeStage service called LifeStage Retirement Income, and this is looking at your account balances when you reach retirement. And what it's trying to do is prevent two very common tendencies from occurring. One tendency, and they're both not good, but one would be to take out your defined contribution balances too quickly. Okay, DC plans are a balance, and if you take it out too fast, it'll be gone. Okay, unlike a defined benefit plan, which lasts your lifetime. So it's trying to look at those balances and calculate an amount that you can take out every month so that it lasts your lifetime and the lifetime of your survivor. Often that's going to be your spouse. So how does it do this? Well, it considers your account balance, assumed investment rates of return, the age of your spouse, and your personal risk tolerance on your LifeStage investment management profile. The goal of LifeStage Retirement Income is to give you monthly payments within a safety zone so that it lasts your lifetime and continues to your survivor for their lifetime. It works in conjunction with LifeStage Investment Management, and I think this is really important. Like your defined benefit plans, it's trying to calculate an annual increase in your monthly income so that you can help keep up or outpace the rate of inflation. Another real flexible component of LifeStage retirement income is that it allows you to set aside a portion of your account balances that is not included in the calculation. And this is important because I've talked to a lot of clergy that have retired, and they said inevitably they had a large expense or something unexpected came up. So they're allowed to take a partial distribution from this money that they've set aside, not included in LifeStage retirement income, so that it doesn't disrupt the monthly income they've come to expect. So let's talk a little bit about these really important new but optional and customizable features coming in just a few short months in the spring of 22. There's going to be a Social Security bridge. We'll talk a little bit about Social Security and the Social Security retirement program and how that is for many of our participants, clergy and lay, an important source of retirement income. Second optional feature is the longevity income protection annuity. And this helps minimize the risk of outliving your balances. There's going to be tools available. There's going to be resources available. There's going to be online modeling in benefit access coming in the spring. So you can go into benefit access, put in different amounts, look at the different optional features, and see what the results will be in terms of monthly income. So having said that, this is a good reminder, especially if you're retiring next year, to register for benefit access if you have not. We've made the registration process easier and safer and very secure. So I think it's a good idea if you have it as follow-up to this webinar to register for benefit access. If you're retiring next July 1, you will need to go into benefit access to make your decisions. Again, in the spring, you'll be able to see these online modeling of LifeStage retirement income with the new features. Let's look at some of the highlights of LifeStage retirement income at a real high level. It combines your defined contribution account balances into the United Methodist Personal Investment Plan. You decide how much you want to include in the new LifeStage retirement income. You don't need to commit all of your balances to LifeStage retirement income. You can experiment with different amounts. Any money that you did not include, you have control over. You are the participant. These are your balances, so you decide how you would like them to be invested. Many of our active and retired participants will continue to use LifeStage investment management. Other participants, they're very comfortable making investment decisions. They will self-manage their account. If that describes you, you'll be able to continue to do that even in your retired status with the annual conference. These funds not set aside, you have some flexibility. Again, it's your money. You can take distributions from these funds. You can take a partial distribution if needed for something unexpected. You can take a full distribution. But the program gives you some flexibility. You're also allowed to add additional funds at any time to the LifeStage retirement income calculation. So it allows you to transfer freely at any time between LifeStage and the United Methodist Personal Investment Plan. And all this available at no direct cost to our participants. The costs for this program are paid for out of the operating expenses of the Wespath investment funds. The Social Security bridge is an important optional component. Social Security retirement income helps replace part of your paycheck that goes away. Everybody that's eligible for Social Security retirement benefits has what's called an FRA, for a full retirement age, and that is based upon your date of birth. For me, my FRA is exactly at age 67. I can, if I want to, apply for Social Security benefits early as age 62. Well, why wouldn't I do that automatically if I'm going to get a benefit?
Well, Social Security will reduce your benefit for the early commencement. Actually, for every month that it's early, you will receive a reduction. But the opposite is true. If I wait past my FRA for retirement age of 67, I get something called delayed retirement credits. Every month that goes by past my full retirement age, I get an increase of 2/3 of a percent. So for a year, that's an 8% increase. If I were to wait the maximum that I can earn delayed retirement credits, that happens to be age 70 for everyone, I would receive a 24% increase in my Social Security benefit because I delayed. Well, you might be thinking, well, if I delay Social Security, I won't have that income. That's where the bridge comes in. Okay. What Wespath will do in the LifeStage retirement income is give you additional money from your LifeStage retirement income account balances to bridge the time until you get to age 70 when you apply for Social Security benefits with these delayed retirement credits. So it's bridging that time, but it's going to keep your income consistent and level and not decreasing. And that is really important. During this period of the bridge, the LifeStage will adjust your investment allocation to reflect the short-term nature of this bridge, which could just be for several years. Now, I think it is really important, and I've had the chance to do this several years ago. Go to the Social Security Administration website, ssa.gov, and they refer to it as mysocialsecurity.gov. And you can create, if you haven't already, your own Social Security account. And I think this is so important to do because they have a lot of information in there about your earnings history, which is used to calculate your benefit. So you want to check your earnings history, make sure that is accurate, but you can also run estimates on the ssa.gov website to see what your Social Security benefit will be early, at full retirement age, or at age 70 or any time between full retirement age and age 70 to see what those delayed retirement credits, how they would impact your monthly income. The second optional feature is longevity income protection.
And what that's trying to do is minimize the risk of outliving your money. We've partnered with Pacific Life, which is an insurance company, to provide you with what's called a deferred annuity. And this will start when you reach the age of 80. And what this does, you're setting aside some of your money at retirement or post-retirement to provide income later on at the age of 80. So it's monthly income that lasts your lifetime. And if you're married at the time of your election, it will continue to your surviving spouse in the form of a life and 70% annuity. The annuity is based on group insurance rates. And really what this does for you, it gives you some peace of mind, knowing that income will be provided later on at the age of 80. And it gives you, I think, some additional flexibility in your early years of your retired status to spend more freely, to enjoy the lifestyle that you want, and to do the things that you want to do. This is how it works visually. We really have three different,
I think very key or important milestones when your retirement begins. And no two retirements are exactly alike. No two retirements are similar. Okay? For some, retirement could begin at age 65, which is normal retirement for clergy. You could have an early retirement before age 65. You could have a mandatory retirement. Retirement begins, in this example, we'll say at age 65, normal retirement. That's when LifeStage will give you additional income. The second milestone is when Social Security begins. And then in this example, at age 70, when you've taken full advantage of those delayed retirement credits. And then the third milestone is longevity income. When does that begin? At age 80. So when retirement begins, that's when more money can come out of your LifeStage balances because it knows there's something behind it. So you're getting monthly income from those balances, with the intent to give you an increase every year. Then when the second milestone hits, Social Security starts at age 70. You've enjoyed these delayed retirement credits. LifeStage can make an adjustment, take out less from your balances because Social Security has leveled that income. And then the third milestone, the optional feature, is longevity income protection, beginning at age 80 and lasting your lifetime. LifeStage can make another adjustment, take out less from your account balances because now it's getting additional monthly income from both Social Security and from the longevity income protection contract. So really just a kind of interesting approach to providing you with a lifetime of income. Now, what are some things to think about?
And I think this applies to both if you have to make decisions on your defined benefit plans as well as your defined contribution plans. I often tell retirees, think about your health. Think about the health of your spouse. Do either of you have significant health issues that will impact how long you're going to be in retirement? I've also thought recently about, what about my family longevity? I have a good idea how long my family members have lived. Think about your own family situation. How long are people living? How long do you think your retirement will last? What about Social Security retirement benefits? A couple things to think about here. Have you opted out for Social Security? Are you past your full retirement age already? Are you past age 70? Okay, what will your Social Security benefits look like? Again, you can find that information out on your Social Security account, ssa.gov. Also think about any other significant annuity income that you might have coming, either from you or from your spouse. Does your spouse have retirement income coming? And I would also encourage you at this time to think about rolling over outside but eligible retirement money into the United Methodist Personal Investment Plan. And a rollover just means moving money from one financial provider to your Wespath United Methodist Personal Investment Plan account. Why would you do this? Well, it'll help increase or boost your balances so that when LifeStage does the calculation, those balances will be included. We do have rollover specialists here at Wespath that can assist you with that. I've had a chance to look at this online modeling tool, which is going to be available for you in the spring of 22. And it really is just an awesome tool that demonstrates how funding LifeStage retirement income with these new additions can impact your retirement income that lasts your lifetime. So I think it's fun to experiment or fool around with different amounts that you commit. Okay. It also, the tool enables you to determine if you are indeed eligible for these optional features and what is the impact of electing the Social Security bridge. So it's really going to be a great sophisticated tool that helps you discover the impact of including this longevity income protection. That's that annuity contract that kicks in at age 80. So overall, the benefits of LifeStage really are trying to prevent participants from taking out money too fast. That's not good. But also from taking it out too slow, because that's not good. It wants to optimize your retirement income, help you enjoy a comfortable, enjoyable retirement lifestyle. But also we're always concerned about market volatility, market fluctuations, and the program is intended to minimize those fluctuations on your monthly income, but also to minimize the risk of simply outliving your funds. That's what LifeStage is trying to do. So again, it's going to be available in the spring. So just a few short months away. I'm looking forward to spring. Be on the lookout for additional information and communications from Wespath. We will let you know when the advanced modeling tool is up and running. We're going to provide you with a copy of these slides in today's webinar and also an additional recording from Martin Bauer, our Senior Managing Director of our Benefit Plan Department at Wespath, talking about these important changes coming to LifeStage. But you also have people right here at Wespath. You have the benefit education team to assist you. We have a retirement team dedicated to each year's retiring class. Plus you have EY, Financial Planning Services. Okay, you can pick up the phone and call EY. Many of you are eligible for EY services. Remember, our mission here at Wespath is caring for those who serve, and that will continue in your retired status. We are here for you. We're here to assist you. So be on the lookout for this additional information. Now, what are some action steps that a participant can do right now to get ready for these changes to LifeStage?
Again, that My Social Security account is just terrific. Register for that, and I'll tell you honestly, it wasn't the easiest thing to do when I registered for it, because they want it to obviously be very safe and very secure. Take a look in benefit access at your LifeStage investment management profile. Make sure that that has current and updated information. Also consider all other sources of retirement income that might be available to you. Do you have IRA accounts, previous employer plans? Does your spouse have any retirement money, IRA money, previous employer defined contribution plans? Think about calling EY Financial Planning Services. These are important decisions. Again, no two retirements are exactly the same. So schedule or call EY for help with your retirement planning, help with making these decisions, and then contact our retirement services area for any assistance in determining if outside money is eligible to be rolled over. So a couple of real important action steps. Now, the benefit education team has just provided me with some
questions that came in, and I want to thank you all for your thoughtful questions. We want to try to address all of these questions. And the first one is, what are the costs involved in setting up LifeStage retirement income and these optional features? Well, there's no direct cost for our participants for the program. The current LifeStage retirement income, very flexible. It's a voluntary program. If you elect the longevity income protection, you're purchasing an annuity contract, so obviously there's some cost for that. Second, real good question. If I elect the longevity income protection annuity, but I change my mind before age 80, can I cancel that and get my money back? No. That election is not something that is revocable, so you can't change your mind once you've elected that longevity income protection. Another question, real good one. How do I know if I'm eligible for EY Financial Planning Services? Well, if you're an active participant or a retired participant that has a balance of at least $10,000 in our defined contribution accounts, you're eligible for EY services. Many of you have mentioned to me over the years that you have a financial planner or an advisor. That's good. You also have or can get a second opinion from EY Financial Planning Services. This question is interesting. Everyone in my family lives a really long time. Some of us have lived to the ripe age, they say, of 99. Would that help influence my decision on some of the optional programs? Well, yeah, I think it certainly would. We just don't know how long. Again, every retirement is different. How long that retirement is going to last is different for everyone. But if you know for sure you're going to live to 99, and your spouse might live to 99, it might be a good consideration to think about that longevity income protection, because it really is designed, to minimize that risk of outliving your money. And then a real important question, I'm having trouble reading this one. Can the monthly income I receive, this is from that option of the longevity income protection contract, be excluded from taxation like the other plans? And we'll talk about the housing allowance exclusion in your retired status. The answer is yes. The monthly income that you got from the longevity income protection contract, just like money you might be getting from the ministerial pension plan or the clergy retirement security program defined benefit or the voluntary plan, United Methodist personal investment plan, can be excluded from taxation, subject to the three considerations. How much do you get? What is the actual cost of housing? And then the third being the fair rental value. So some great questions. If anyone's questions were not answered, the benefit education team will be following up with you shortly. I look forward to meeting with some of you in the new year. I want to thank you for joining us on this brief informational webinar. Again, my name is Bob Christoffel, and signing off from Wespath headquarters in Glenview. Thank you so much for your ministry and for your service.